It's about how can you make other people's life better. I had a seizure. They said if I get another seizure without surgery, that might be fatal. I had kind of this life path, and I'm going to go to business school, then I'm going to get a job and a father. And it made me appreciate kind of where I was today.
Welcome to another edition of the People of Private Capital podcast. In this episode, we'll be talking with Paul Welch. Paul is the head of private equity at Elizabeth Park Capital Management. He's also the portfolio manager for the Mission Driven Bank Fund. That's an impact investing fund. We'll learn a lot more about that in the podcast. Really great conversation with Paul. He was very giving, very open and honest, talking about his teenage years, what attracted him to finance, the impact of his parents on that decision, a health scare that caused some challenges, but also represented an opportunity for some real focus and insight that he is very generously shared with us in this podcast. I really hope you enjoy listening to it as much as I enjoyed recording it. And with that, let me introduce Paul Welch here on the People of Private Capital podcast. Okay, Paul. Well, obviously, quite a lot happening there. Very interesting background. And, we've got, as is the nature of this podcast, we've got the opportunity over the next hour or so, the opportunity to delve a little bit further into that background. And as the name suggests with the podcast, it is the people of private capital. We're trying to get to know the individual, behind the name, behind the company. And so with that in mind, if you wouldn't mind, if we could maybe step right back and, try and understand a little bit more about you and your early days, kind of move forward then into, how your career progressed. But just start with, just you as a kid. I mean, could you just describe yourself as a younger kid coming into your teenage years? What sort of character were you?
Oh, well, thank you very much, Ferdy, for having me. And, we're excited as a firm, and I'm excited to talk to you. I appreciate the podcast.
No, it's great to have you on.
As a kid, I'm an only child. So I was pretty studious. My parents made it a point to say, you're going to work hard in school. So a lot of reading. I was into sports, and always had a vision of kind of going to school and being a good father, right? And kind of being able to provide for my family. So I think that's kind of what drove me. I would say one of the things I think that differentiates me is really being able to talk to my mom and dad about here's kind of the long-term life plan at a relatively early age. And I think being a only child has some advantages like that, and also some disadvantages. But that's for a different podcast.
Yeah. Well, I know I'm a godfather to my godson Aiden, and he's an only child and very, very close to his parents. My sister and her husband, actually, I think probably similar, very studious sort of character. Lives out in Long Island and goes to Hofstra right now. In fact, this is his first year there. But I can certainly relate to, I have a couple of kids, but I can relate to that, the significance. In fact, we're now back to having just one child in the house. My son has gone to college himself this year. And it's very clear that our daughter is paying for the fact that he's at college. We're watching her, studiously, and she is the source of all of our attention, all of our affection now that he's gone. So I can imagine as an only child that's a dynamic in and of itself. But obviously very close.
My mom was also a school teacher, so she also kind of brought it home a bit and said, "Here's what I'm seeing kids act like, so here's what you won't be acting like."
Right.
Even a different level of examining.
Yeah, absolutely. Well, very good. And so you obviously you had a very close and sounds like still have a very close relationship with your parents. They were, you would say, influential in terms of your focus. As a younger child.
Absolutely.
Yeah.
Absolutely. Yeah. Just kind of moving into the teenage years. So my dad worked for Big Pharma.
Right.
So, say Upjohn at one time and Johnson & Johnson. And so he would come home and talk about kind of his day at work. So just kind of secondhand listening, I said, that sounds pretty interesting, kind of him executing strategic plans and the like. And I'd hear my mom talk about kind of working with kids. So I think, years and years of dinner conversation really helped me kind of see, here's what I like about kind of what my dad does, and here's what I like about what my mom does.
Right.
And then, between kind of looking out at where I thought my interests lie, I chose to go apply for an undergraduate degree at a undergraduate business school.
Right.
So that was kind of the thought, was really taking my dad, who was a marketer, taking kind of his business plans and thinking about, hey, I like numbers, and they seem to come relatively easy.
Right.
They got a lot harder later that we can get into. But so trying to combine that and see if there's something out there to help me fulfill my goals.
Right. And so from an education perspective, just talk me through that path. You still maintain very close ties with some of your educational past. I know we talked briefly about this, but just for our listeners, just talk us through your kind of educational path.
Sure. So when I was in high school, I moved from Philadelphia, where I am now, to Kalamazoo, Michigan. And so they told me on my 12th birthday, it was kind of, it was an interesting reaction. First, I didn't know that was a real place.
Right.
And secondly, I was absolutely not wanting to go. So while I had a great time there, one of the goals was to find a way back to Philadelphia. So Philadelphia has the University of Pennsylvania, and they have the Wharton Undergraduate Business School. So that was kind of my top choice.
Right.
I talked to all my friends back in Philadelphia. They're like, we're staying around here. We're going to go to the local universities. So worked hard in high school, got into Wharton. Now, in the meantime, all my friends who were from Philadelphia left and went somewhere else.
Right.
So, but that's okay, because that helps you grow and expand your comfort zone. So I got to Wharton, and there are just some very, very smart people at Wharton. So that helped me understand that not only do you have to have a vision, but you have to be able to put in the time and the effort. So that's really the work ethic that helped me understand and execute. So that was working through my Wharton degree, which was in finance and marketing.
Right.
So kind of the two things I talked about from my dad.
Yeah.
And volunteering to give back to some of the education. So Wharton is in Western Philadelphia, which is some challenging economic areas. I tried to do things around the university to help. So that really kind of put things together for me and laid a nice foundation for what I wanted to do in the future.
Yeah. And so the finance and marketing piece, you weren't tempted to pursue the marketing role? I mean, obviously what you're doing right now is very heavily finance focused, but that didn't appeal, or finance was just more of a draw for you?
Yeah, I think I like to think of myself as more of a logical process person. I think marketing involves so much creativity and just kind of esoteric thinking that my skill set was more positioned towards, let's think about how we can execute this on a process basis. And I think the foundation and the infrastructure for finance was better suited for me.
Yeah. And so after your time at Wharton, what was the next? What was let's say the first significant step for you post Wharton?
I worked at a municipal investment bank consultant company called Public Financial Management in Philadelphia.
Okay.
And, I think that it helped me get comfortable with a lot of numbers and financials, but I really didn't appreciate municipal finance. I thought there was more to life than just kind of issuing bonds for a sewer system.
Yep.
That's essentially what I did.
Right.
And so when, it is exciting as it sounds, but look, some people love it. So I don't mean to say it's just not for me.
Sure.
So one of my colleagues went to a firm called Hamilton Lane Advisors. And so Hamilton Lane is a big gatekeeper for CalPERS and NICERS, and they've really grown that business. So I went over with them. They brought me. And that's where I got my first exposure to private equity. and investments, direct investments. And I thought that was neat because that combined the story that I talked about with marketing. So here's why I'm investing in this company, and here's what we're trying to do. And then behind that, here's the numbers that are going to help us get from A to B. So I thought that was pretty neat. Again, the fact that you have to make a educated guess. And so there's so much information, you get to pursue a lot of learning avenues and then make a informed opinion. That just really played into kind of the way that I try to position my life.
Yeah.
Collect information, process, decide. And so even from early days in high school, that was how I tried to get a life plan going.
Yeah.
And so I thought this was a neat industry for me.
Yeah. And so,
but I guess I'm sorry, Freddie. At the time, I talked with my dad about going back to business school. And so I really felt like Hamilton Lane was a good bridge in between my undergraduate degree and my graduate degree.
Right.
At the same time, I got my CFA, my Chartered Financial Analyst, because it's all about learning. It's about growing your experience and your perspective. That was something that I thought would be very, very valuable to give me more options in the future.
Yeah, yeah. And so the time that you had in the private equity sector before you went back to college, I mean, did that inform your focus? I mean, were you looking to drill down even more deeply on PE? Did you have enough exposure at that time to determine, hey, I really like this. This is something I'm suited to?
Yeah. So actually, when I did think about continuing with private equity, I was more attracted to public equity. And I think there are a couple things that drew me to that. One was I read a book called Investment Leadership by Jim Ware. And in that book, there was a highlight of a firm called Ariel Investments.
Right.
And so Ariel and their founder, John Rogers, talked about this is a job for someone who's competitive and who's hungry, because every day at the end of the market, you can see how your investment and your thesis is working out. And so that made a lot of sense to me. And from growing up in, single child and playing a lot of sports, I'm a competitive person. So I thought that would be neat. I also felt like the opportunity to access information from 10Qs and SEC reports was just something that was so powerful. And public investing has so much information. You think about books that are written about public equity, SEC reports, industry reports like the FDIC Center for Financial Research. There's so much information that I felt like if I have access to this information and I bring the same type of work ethic, that should be very entertaining for me and very exciting. So I felt like that was the opportunity for me to transition to something that I had a lot of excitement for, that was very energetic and engaging and would provide a nice future.
Yeah, very good. Well, I know Ariel is going to feature in your story here in a little bit. Might come on to that, but just before we do, one of the things that interests me, and I used to do a lot of cross country running, and I still do long distance running now. I'm a competitive person. Is the number of competitive people? I guess it's part of the makeup, whether it's venture capital or private equity or real estate or any of the asset classes.
Right.
It does attract competitive people. Interested to learn a little bit more about what sports you participated in, and how that kind of helped shape your character.
Sure. I haven't talked about this in a while, so happy to touch on it. So I was all state at soccer.
Oh, right.
Which is, my dad really kind of positioned me to play sports he did not get a chance to play growing up. So soccer, I was pretty good at. I also played tennis, and so I was ranked on the state at tennis. And tennis is a really interesting sport because it's basically you.
Yeah.
And you have a lot of control over kind of your action. So I think it's not a team sport, but as you practice, as you continue to refine your craft, that will help you get better and react to different conditions. Mm-hmm. The last sport I played was basketball, but I wasn't very good at that.
All right.
But,
okay.
Those were the three sports. I think if we're talking about athletics,
yeah,
I got into weightlifting as a in Penn.
Right.
And that was the backstory is I'm a guy who moved from Kalamazoo to hang out with his friends in Philadelphia, who then all left.
Right.
So I spent a lot of time in the gym, just kind of talking about like how can I occupy my time. I miss Kalamazoo. I miss my friends there.
Yeah.
So but what I think, and I've seen this across multiple weightlifters, is that there's a level of discipline at weightlifting where some days, I'm sure you don't want to run. Some days I did want to go to the gym.
Yeah.
Running and weightlifting, probably both, and I'm not a runner, require you to eat so strictly that you are saying, should I continue to do this? I don't see results today. But that's not where you're looking for. That some patience and a commitment to longer term results.
Yeah.
So when I was at my first job, they would say, why are you eating a can of tuna? And I say, well, I just spent 2 hours in the gym last night.
Right.
So this is what I'm doing. I don't want to go kind of halfway.
Yeah.
I'll work out, but I won't eat right.
Yeah.
Now, in hindsight, that looks crazy because there's no way that tasted good. But I think so I've removed myself from that. But I think that type of competition and long-term focus, and from weightlifting, was really very valuable to me. And I think that type of competitiveness is all across investing.
Yeah.
Because every time I make a decision, if I say buy or sell, there's someone on the other side who's saying, I don't agree with that. I think if I say buy, they're saying sell. And that's the beauty of this job. I mean, think about any other job where there's so many different opinions that everyone has an opportunity to kind of express themselves. And they'll even write about, here's why I think this stock Paul likes is not good.
Yep.
I have the opportunity to read that, think about that, and say, okay, here's why I don't think that's right. And then that makes me smarter and my clients better off. Or here's why I think that is right, and I didn't think about that. Again, I don't know a lot of other industries where they share kind of trade secrets. But this is a great industry for someone who's voracious reading, passionate about learning, has a commitment to kind of saying, where is the next thing I can learn or grow from?
Yep.
And so that was kind of the things that I think drive people to investment management or private equity.
Yeah. Very good. Always fascinated to talk about people's background, and I think sport, and whether it's team sport or individual sport, it's a really interesting indicator of the individual and whether they're suited to the role or not, particularly in this industry. So interesting, but
right.
That's quite a crossover between basketball and soccer and what was the other one you mentioned?
Tennis. Yeah.
So all right, well, so getting back on track then. So the next step in your career, you mentioned aerial investments there. How did that move to aerial kind of come about, and in what capacity did you work with them?
Sure. So I had gotten into Chicago for business school, now currently called Booth, and I had to defer for a year because I had a medical issue called an arterial venal malformation, or an AVM for short, in my brain, which is basically brain bleed.
Oh, wow. Okay.
So I could not stay, everything's okay now, but I could not stay conscious for longer than 20 minutes.
Wow.
And so that was about 2 months before I was supposed to go to Chicago. So I deferred for a year, and I got a job at a local investment manager where they gave me that book that I had mentioned, Investment Leadership by Jim Ware. And so I read that book. The commitment that Ariel had to long-term investing. So again, I talked about, I won't see those weightlifting results this week, but I'm going to continue. The commitment that Ariel had to philanthropy, and I'd love to talk about that either now or later, really made me feel, and last thing that Ariel impressed upon me was that it was a group decision. So we all talked about it at Ariel, and then they said, here's why we are going to pick this position. So I've really read that about Ariel and kind of as an idealistic young man, I said that's where I want to
Yeah.
work. I think the investment outlook, I think that their commitment to philanthropy, and I think that the teamwork makes me think that that is the best job for
Yeah.
me. And so when Ariel, 80% of Ariel's analyst pool comes out of the University of Chicago. It's based in Chicago.
Right.
So as soon as I hit the ground at University of Chicago, I did my best to try to get in front of Ariel. And after multiple months of pitching and trying to be involved, learning about the Ariel Community Academy, which is a public school that Ariel supports financially, I was offered the internship at Ariel. And so that's how I got to Ariel. And, they really set kind of my base investment thesis of paying less than a full dollar for what a company's worth, having an independent view. So again, all these books behind me and all the reading sources and data sources we talked about earlier, continuing to learn. And then lastly, how can you give back to communities and enrich, empower, and provide opportunity to others?
Yeah.
And so I think that's some of the things that Ariel taught me. And I brought that along with me every step of the way as I continued past it.
Very good. Well, just to put it in perspective, what age were you at this point, Paul?
So when I joined Ariel, I was 29 years old.
And so that's not to kind of go too far, of course, but a major, what sounds like a major medical kind of situation there, right? How significant let's say, a turning point was that for you, if you could call it that? But how significant an experience was that? Obviously, apart from being extremely challenging, I'm sure physically.
Yeah. Well, yeah, Ferdy. Yeah, absolutely. When you come very close to, because I had a seizure, they said if I get another seizure without surgery, that might be fatal. Wow. So I was on a waiting list for what was then an experimental procedure called a gamma knife surgery, which is when they go in with radiation and they radiate the blood in your brain, because it was too close to some of the nerve endings to cut into my head. So it definitely resets your priorities. As I've talked a little earlier, I had kind of this life path where it was, here's where I'm going to do now.
Yeah.
Then I'm going to go to business school. Then I'm going to get a job. Then I'm going to be a father. And it made me appreciate kind of where I was today and try to take advantage. The one good side of this is that I had a girlfriend who I was going to break up with in Philadelphia when I went to Chicago. She stayed with me, and she is now my wife.
Right.
So we are celebrating 19 years of marriage. So that worked out well. Yeah, no, thank you.
Very good.
But absolutely, that reset kind of where are the priorities and how can you try to make the most of each day and really make an impact on the world while you're here. So I think that's a fair assessment. But yeah, I know I was in the hospital for about a month. I couldn't leave. I was on an IV and stretch and just waiting for the gamma knife surgery. So everything has gone well. And I'm back to fighting weight at 2006. So I had my surgery in 2003, 2006. I was clear.
Wow. That's incredible. I mean, I know you made reference to, let's say the charitable outlook of Ariel and some of the learnings that you had there, but I'm imagining that with that personal experience, the exposure to what sound like very, very giving group of people, that has shaped your outlook. I know we spoke briefly about a couple of things on the let's say the more philanthropic side. Can you just talk about that a little bit? Just set the scene. And
I would love to.
Yeah.
No, absolutely. That's a huge part of kind of why I think I'm in a good position, and it's what I try to tell my 12-year-old twin. So I have some twins, and it's about how can you make other people's life better, and that'll come back to you. But sorry, that's my parenting statement of the time here. But yeah, so Ariel in Chicago, the public schools were having some financial difficulties. And so Ariel elected to invest money into a public school instead of a private or parochial school on the south side of Chicago. And so they founded the Ariel Community Academy. And so the Ariel Community Academy is financed partially by Ariel. And so what they do is they instituted a investing curriculum. Because if you look at lower to moderate income neighborhoods, they don't talk about the stock market as much as, say, more affluent neighborhoods in the United States. So what Ariel's goal and strategy is I'm going to bring stock market and personal finance to you at a younger age. And through the children, I can get to those families. So it's really about building the generational wealth in the future. So as part of my time at Ariel, I would go into the classrooms and we would talk about, what stock do you like? Do you like Coca-Cola? Do you like Nike? Those were some of the big ones that the kids would pick. And so Ariel gives $10,000 and then those kids get to invest that money that Ariel manages for them. So they actually invest. Right. They get to see how their portfolio does. And then when they get to 8th grade, whenever's above the 10,000 that Ariel started with, those kids get to give to the school. The 10,000 that they started with goes back to the next first graders. Right. So it's really a circular, and it's building a passion and involvement about the stock market. So I had never heard of the stock market when I was growing through high school. These kids are telling me why they think that Coke is better than, better than McDonald's, and they're giving me reasons why. And I was just so impressed. I thought it was just outstanding because even if they don't participate in the stock market, the fact that they're fluent enough to kind of understand that will really serve as a confidence booster for whatever financial challenges or opportunities that come their way. So I thought that was really neat. And, that's the base. As I moved on in my career, I was approached by a school called the Jesu School. Yep. And so Jesu is in Philadelphia. It's the only Jesuit K-8 school in northern Philadelphia. It is a nonprofit. It operates in the red, losing money every year. Just to kind of give you a sense of Jesu, 54% of the families of Jesu earn less than $30,000 a year. 50%, more than 50% of the families are from a single parent household, and 100% qualify for free breakfast and or lunch. So this is a economically challenged neighborhood. We raise money, we as Jesu raise money to keep the school running each year. And so I was approached by the president when I worked at my next job after Ariel, and she told me a little about Jesu. I thought, wow, this school is really making a huge difference in a community that really needs it. And so I started sponsoring a child, which again, I told you they need to raise money to just keep the doors open. So I paid that tuition for a child. I got to do that for 2 years. I joined the board when the president asked me, and I'm now part of the investment committee. But, the greatest thing has been bringing that stock market curriculum from Ariel Community Academy to Jesu, and just seeing those kids kind of, when they see what compound interest is, their eyes light up. So what happens if you save 10 cents a week and you're in 3rd grade? When you get to high school, how much are you going to have? I don't know, $12? No, that's not it. And then just kind of blow them away with that power. And so I think that is some of the greatest times that I've had, is just building those bonds with my sponsored children, or building the bonds on just, even the teachers say, Paul, thank you for coming. So it's not about me coming, it's about showing them again, opportunity, enrichment, and building a passion.
That's that's admirable. So I mean, the opportunity to engage with a school in such an underprivileged environment. You served in that board for, was it 7 years?
7 years,
which is incredible. And And at the time, you made reference to, you had moved on from Ariel, so you're with Penn Capital Management at the time. Yeah,
That's right. At that time, yes.
What were you doing at Penn?
Sure. So I joined Penn. Well, first, my wife and I, my wife's from South Jersey, South New Jersey. And so Chicago's too cold for most normal people.
Yeah.
And she's normal. I'm a bit, I was born in Chicago, so I could take it. But we wanted to move back to the Philadelphia area. So we both came back, and I joined Penn as an analyst, where I would work on equity, common equity, and bonds.
Right.
Now, here's another example of, I knew absolutely nothing about bonds, but I said, I will come there and learn. And so we did high yield debt. And again, that's just approaching the world with, what can I take away from all these conversations? Who can I talk to learn so that I have a better perspective? So that was one thing that I did at Penn. Across 10 years, I got equity partner at Penn. I co-PM the mid-cap strategy. I ran the financial service fund. So I covered financial services and industrials at Penn.
Right.
So just continuing to try to build a network, and I thought it was very interesting to cover both debt and equity in the same companies. That was fun.
Yeah.
And I learned a lot. So
it's interesting. When I first was exposed to private equity, I had come from the other side, from the dark side. I was building software companies and raising capital, for my own purposes, or rather seeking capital.
Yeah.
And so I really knew nothing about the space, and I think you've got to have that kind of beginner's mindset, which it seems just from the conversation so far, you very much have. But also, the theme of kind of continuous learning, lifelong learning, not being afraid to push for bridging that gap, that knowledge gap, whether it's for you or for other people. So education has clearly been a very strong part of your let's say your DNA. Right. And as you mentioned, kind of encouraged by your family, which is crucial. But as you kind of continued through your career, I mean, you've had, continuous learning, you're involved in the educational space, even more recently, you're just sharing with me, prior to recording, some of the learnings. How significant do you think it is for somebody who's operating in the private capital space more broadly to have that kind of beginner's mindset, that kind of lifelong learning desire, in order to be successful?
It is absolutely crucial. So I think about how much I come from banks now. I think about how much banking has changed in the last 3 years with the onset of financial technology. There's a small banking dislocation in the U.S. right now.
Sure.
And so I see that learning and having an open mindset, because people will continue to grow and develop new products, new strategies. If you are not open to learning those, you're going to outdate yourself. You need to be very, very open. And, I think the market, private or public, can humble you very quickly. So I think humility is the absolutely most important thing for an investor. I think that if you are not humble, you will learn how to become humble. And that's hard for someone to come back to. So I think, I think not only is learning from numerous sources is very critical. So, for example, I've signed up for the American Bankers Association Stonier School of Banking, which is the target audience there is C-level executives or rising management at community and larger banks. I am one of only 2 investors who goes there. And so people generally look at me like, well, I don't want to sell to you. But after they get that through, I think they understand that I'm there because I want to learn from them. I don't want to say, here's what I would do. I want to hear, here's how you got to your decision. And I think just finding common bridges, not only in investing, but in life, is the way to kind of put your best foot forward. And so I just encourage everyone to do that, whether it's my son, and, he'll always push back, well, what are you doing? I'm happy to tell him, here's what I'm doing. And again, I'm not rewriting history books here. I think some of the most respectable people have always kind of said, take a walk in someone else's shoes. I think that's what continuous lifelong learning is about.
Very important. Very important. Okay. And so, Paul, to bring us a little bit kind of closer to what you're doing now. So after Penn Capital and working at, I think, Patriots Financial Partners, right, in the interim?
Correct. Yes.
Yeah. Can you talk a little bit about, just briefly, about what you did at Patriot?
Sure. So Patriot is a private equity focused firm on community banks and thrifts. And so the attraction to Patriot for me is simple numbers game from a financial guy. So when I look at all the public banks versus the private banks, there is a multiple more that are private. So I thought that was very, very interesting. Again, going back to lifelong learning, a lot of the senior folks at Patriot were former bankers. So really trying to understand what makes the people I'm investing in tick. How are they thinking about the world? So that's why I joined Patriot about 5 years ago. We structured deals. We made non-control investments, which is below 25% ownership, in private U.S. banks, mostly community, so-called $1 billion assets and below. And we take a board seat. At Patriot, we were 75% minimum commercial banks, 25% maximum non-depository. And a big part of that was financial technology companies. And I was in a position as Patriot kind of evolved and embraced more of the financial technology side to be one of the leaders there. And so I was on the board of a few fintech companies. And that's another version of lifelong learning. I'm an investor who works on the public side at the beginning, thinking about 5 and 10 year horizons, versus now I'm sitting on the board of a fintech who needs to raise capital every 12 or 18 months because they're burning through cash so quickly. But I mean, it was a wonderful experience, and I still have some great connections and networks, and I think that fintech is absolutely going to be a force as we think about banking and all types of industries in the future.
I think it's, as a fintech ourselves, and, we've been through a couple of rounds of funding. We'll probably go out again next year when the market gets a little bit better. But I think it's extremely important for, when we look at potential investors, that the individual or individuals that may be joining either the board or, a little bit more actively involved with the company have some operational experience and know what it's like to be at the coal face. And I guess your background has kind of given you that. And it sounds like very actively at Patriot.
Absolutely. But I think you've hit on it, and maybe just to expound on it, just being an entrepreneur and starting your own business is so much different than the way I think about the world. It's been enlightening to think about. I didn't think about how to execute based on, limited cash flow or how my cash burned. And I think that's some of the challenges that without that type of experience, I wouldn't have been exposed to. And it made me a better investor. And it also made me a better, I think, overall person, because again, hearing how people are dealing with some of the issues you have, you're in the same exact market, but you're looking at it from different perspectives. And so I think that's another, to hammer home the lifelong learning. Expose yourself to different perspectives. It'll make you a better person, overall investor. Or let alone investor.
And so just to bring us kind of right up to date then, so your most recent move, if we talk about, what you're doing at Elizabeth Park, just give a little bit of perspective. How did that move come about, and where are you focused now?
This is going to hit on a couple of the same things we've talked about. And I'm really excited about how it's bringing together my passion for banks and a commitment to giving back to the community.
Yeah.
And so Elizabeth Park is a company founded in 2008. Of the 7 other people who work there, I have a professional relationship in my career with 4 of them. Right. So it's really kind of knowing folks and knowing how they think about the world professionally and philanthropically that had me looking at a job with Elizabeth Park.
Mm-hmm.
Elizabeth Park won the RFP. Elizabeth Park, if I may say, Elizabeth Park is the lead fund manager for the Mission Driven Bank Fund, which was the brainchild of the FDIC. And what that fund specifically does is a private-public partnership that invests in minority depository institutions, MDIs, and in community development financial institutions, CDFIs. And so all of those are insured by the FDIC. I think when you look at the lack of capital access, the lack of assets that are in MDIs and CDFIs, it is staggering. And I'm so happy to be able to address this deficiency. And so maybe to put some numbers around that. If you look at the minorities that we target, which is Asian, 2 Hispanic, 3 Black, 4 Native American, 5 other Pacific Islanders and Native Hawaiians. That represents, of the U.S. Census 2021, 38% of the entire population.
Wow.
Of all the MDI and CDFIs who serve that, total assets in all the U.S. banking industry is 1.6%. So think about that discrepancy. Wow. There is not opportunity or investment in these banks. And so what we're trying to do is benefit not only those communities, but the entire U.S. banking system by devoting capital and operational support, introductions to third-party providers. And I think as you find underutilized, overlooked, and underserved investments, whether I'm at Ariel, Penn, or Patriot, now I'm in Elizabeth Park, and I get to marry that with helping communities. That's what makes this such an exciting program. And so we are in the middle of raising our capital, funded by Microsoft and Truist as our anchor investors.
Right.
And they have $120 million given to us. So we are excited to deploy their capital and other capital as we come to market.
That's great. And so the target raise for that fund is significant, Paul, right?
Yes. So we're targeting $500 million to $1 billion. And between our 2 anchors that I mentioned and our lead investor in the first close, which is targeted for Q3 2003, we have soft circled $135 million at a minimum.
Yeah. And just to kind of characterize the type of investors, you mentioned your kind of anchor investors, but the type of investors that you're targeting or likely to find this fund attractive would be who?
Yeah, thank you. So it's really 2 large groups. It's banks, and we're talking larger banks because they get Community Reinvestment Act credit. Right. Because if you give us money and we invest in these communities, which the government recognizes is underserved and deserving, the banks should get credit there. And then foundations and endowments, because I think right now impact investing, particularly after the murder of George Floyd, is such a overlooked, and people are saying, what can I do to make my money make this world better? Not just give me a return, but make it better for my children, make it better for others. And that's really what we're at the crux of. Investment, returns, and mission, with mission being the predominant focus for our fund.
Yeah. And so is that within Elizabeth Park, is that where you're focusing the majority of your time and effort?
Yes, I'm the portfolio manager, so 100% of my time is devoted to the mission-driven bank fund. We are partnered with Calvert Impact Capital, who is a renowned world impact investor, and we have a sub-advisor of Strategic Bank Value Partners, which is another experienced private equity investor. So we really have kind of a best-of-breed lineup because the FDIC understood there is a need and there is a demand to do this to justify how we're deploying capital and build up the overall U.S. banking system.
Yeah. That's incredible. Yeah, I mean, we're at Asset Class, we're delighted to be able to work with you guys, and very much looking forward to bringing a world class solution to you and helping with that mission.
For Asset Class has been great. You're not asking for that, Ferdy, but I just want you to know that, especially bringing those three partners together, Asset Class has been a real lifesaver.
Appreciate it.
And leading us to have a common database.
Appreciate it. Well, Paul, I think, just as I look back on your background, this conversation, kind of your career path, it seems to me like there's a confluence of a number of different themes. I mean, I've already mentioned this concept of lifelong learning, which I completely agree with you is incredibly important as an individual, as much as as a trait of your career. I think the philanthropic outlook or that that permeates your work with JSU, your time at Ariel, what you're doing now with the Mission Driven Bank Fund, and I guess writing that balance, with some significant backing, which is really what's required here, right? Is really admirable, but it also seems to me like it's a really nice combination of things that are naturally part of you as an individual. The other thing that kind of strikes me is how important it is to have that direction very early on, whether you're a parent or a manager or somebody who's in a position of influence. Just as your parents influenced you, and you had that opportunity to kind of pay it forward, and as you say, with your twins, I've certainly experienced it myself with my kids. It really is important to have that kind of longer term outlook, that investment in time and caring, and it's wonderful to see people like you out there bring that knowledge to bear on some really such important themes, and for people who don't have the voice, in many cases don't have the education, certainly don't have the money to to give themselves that next leg up. So I think it's extremely admirable. Congratulate you on your career to date, and obviously with Mission Driven Bank Fund, the opportunity to be really, really impactful. Everything you've done so far has been impactful, but this I think is a huge opportunity, and really delighted to be able to gain some insights into what got you here, and perhaps in some future episode we can share with the audience how that's going and the kinds of things that you guys are undoubtedly going to be able to achieve. So really,
that sounds great, Ferdy. Thank you again for the nice words. Again, so many people helped me throughout my career and are continuing to help. So I am the conglomeration of a lot of work from a lot of smart, dedicated, and kind people. So I just try to pass that on. Again, I'm walking in the footsteps of people who have come before me, but we would love to come back and report on some of the successes we've had at Mission Driven Bank Fund. So thank you very much for the time, and I appreciated a lot of your questions. Thank you.
Thanks very much, Paul. Thanks for joining us again on the People of Private Capital podcast. Take care.